Outlook last week. Not looking great this morning either. After a 14% drop on Friday, the worst day for the stock since 2006, it's down another 1.4% this morning. Wedbush removing the stock from its best ideas list today. Also lower, Pfizer. Data over the weekend revealing that Paxlovid, which is its pill for treating COVID-19, failed to show benefit as a preventative therapy in a trial. So that stock's down 2% ahead of Pfizer's report tomorrow morning before the bell. And finally, in the airline world, we got three players involved here. JetBlue trying to buy Spirit Airlines, sweetening its offer, including a big breakup fee and divestiture commitments. Then Spirit saying, nope, we still prefer Frontier's bid for the company, which actually was lower, $2.9 billion. That stock down 7%, trading at $21.96, about $4 below Frontier's offer price of $25.83, John.
Kelly, awesome this morning. Appreciate it. Kelly Lyons there, just breaking down some of the movements. I'll break down some of the sector price action for you about a minute and 50 seconds in. We're positive on the S&P by a tenth. The leadership is pretty defensive at the moment. Utilities and staples. Utilities up 7/10, staples as well. At the bottom end of this market, the other performance coming from energy, down 0.6%. Consumer discretionary as well, down by about a third. Lutol's Jim Paulson looking at inflation and expecting it to continue to drive equities lower. He says the following: all the fears we have about a Fed policy mistake and recession are tied to concerns about inflation. And that's been reflected in the stock market this year. If inflation continues to rise, then the downside risk for stocks is double digits. And Taylor Riggs, let's face it, we're basically already there.
Yeah, I mean, certainly on some of the individual stocks, John. I mean, I'll just start broadly. You mentioned the NASDAQ 100 just had its worst month going back since 2008. Friday alone was the worst day since September of 2020. But you're right that underneath the surface, I mean, in April alone, Netflix is off 50%. We talk about the year. I think that number is closer to 60, 70%. Pretty much nowhere else to hide when you think about NVIDIA, Match, AMD, PayPal, Amazon, you name it, right? April really was a tough month as you're facing higher inflation and, of course, the rising interest rates that follow that. Change of the board, I think what's interesting, you've been doing this a lot on your program, is sort of the defensiveness of this nature. On record, you had staples outperforming discretionary in April, sort of the huge divergence that we continue to see. I would argue that perhaps maybe staples are those, of course, that can pass on some of those higher costs to consumers. And at least for now, consumers, they are doing okay, but I do wonder when you start to see a pivot, definitely more towards staples and away from some of those discretionary items, as typically budgets are fixed and you only have a finite amount of money